God's money. Let's talk about real money. Not that flimsy paper in your wallet, but gold, silver, and platinum. The God's money. Unlike paper money, which loses value every time the government prints more of it. Inflation eats away at your dollars, but precious metals hold their worth because they're scarce and can't be printed like cash. Think about it. In the 1950s, you could get an ounce of gold for $400. Today, over $2,000. And some experts predict it could hit $10,000 by 2032. Meanwhile, your hard-earned dollars losing value faster than your phone battery on 1%. That's why rich people don't just sit on cash. They hoard gold like a dragon on a treasure pile. Now, if you're thinking, but I don't want to store gold bars in my sock drawer, don't worry. Gold ETFs let you invest in gold without needing a vault. These funds track gold prices so you can grow your wealth while avoiding the hassle of storage. Bottom line, gold equals real value. Cash? Well, let's just say it's a magician's best trick because it keeps disappearing. Industrial commodities, the metals that make you money. Ever wonder what keeps the modern world running? Industrial commodities. Without them, we'd be rubbing sticks together for fire. Take silver, not just for fancy jewelry, but also for electronics, medical gear, and even nuclear reactors. Then there's cobalt, nickel, and copper, the rock stars of industry. Cobalt, for example, is a big deal in EV batteries. Back in 2012, it was $20,000 per ton. By 2022, $40,000. That's a 100% increase. Meanwhile, your paycheck? Still looking at you like, nah. Now, unless you have a secret mine in your backyard, and if you do, call me. Buying raw metals isn't practical. Instead, you can invest in mining stocks, mutual funds, or even futures and options. Bottom line, metals don't just power your gadgets, they can power your wallet too. Safe haven currencies, the VIP lounge for your cash. In today's world of fiat money, cash isn't backed by gold anymore. It's just paper that has value because we agree it does. But when things get messy, wars, crashes, chaos, people want their money somewhere safe and stable. That's where Switzerland comes in. Rich folks love Swiss banks because the country has one of the strongest, most stable economies on the planet. In times of crisis, like the 2008 financial meltdown or the Eurozone debt mess, money rushed into Swiss francs like they were life rafts. Even during the Russia-Ukraine crisis, Russia ditched the US dollar and used Swiss francs to keep trading. That boosted the franc's value. In early 2023, one Swiss franc was worth 1.1074 US dollars. So anyone holding francs? Yup, they got richer by just chilling. You don't need a gold-trimmed Swiss bank account to get in on the action. With just $100, you can invest through currency ETFs or trading platforms like Forex.com. The takeaway: when the world goes wild, smart money hides out in calm places, like Switzerland. The Swiss franc is basically the first-class lounge for your cash. Sovereign guarantee: why your money trusts the government. Have you ever looked at a US dollar? It says, "This note is legal tender for all debts, public and private." That's just a fancy way of saying, this paper is money because the government says so. Since 1971, when President Nixon ended the gold standard, the US dollar hasn't been backed by gold. It's backed by trust in the government. So basically, your money is valuable because the government promises it is. This is why people like sovereign guaranteed investments, things like treasury bills, notes, and bonds. These are backed by the US government, and since governments are the last ones to go broke, they're one of the safest places to park your money. But be smart. Not all countries are stable. Remember Greece in 2009? Their government nearly went bankrupt, so only invest in government securities from strong countries with good credit. In the US, these government investments often give you better returns than your bank savings account. And the best part? You can start investing with small amounts through a website called Treasury Direct. No need for a broker or fancy setup. In short, These investments may not be exciting, but they're safe, stable, and backed by the biggest safety net around, the government. Value stocks and mutual funds. Slow and steady wins the wallet. Putting your cash in the bank is like hiding it under your mattress. Safe, but it's not doing much. Treasury investments are better, but if you want your money to actually grow, welcome to stocks. Now, not all stocks are wild roller coasters. There are two kinds. Growth stocks, flashy tech companies that promise the moon, but might crash before takeoff. Value stocks, boring but reliable companies like industrial metals. Not sexy, but solid. Like the dad shoes of investing, value stocks grow slowly, pay steady dividends, and won't give you a heart attack every time the market sneezes. But picking the right ones, that takes time and brain power. So if you want the benefits without the homework, try dividend-focused mutual funds, like Vanguard's High Dividend Yield Fund. It's like getting a basket of solid companies that send you cash while you nap. Bottom line? Slow and steady pays rent. Land and real estate. The OG investment. Land is like the OG investment. People have been fighting over it since cavemen wanted better cave views. Why? Because it's scarce. It's always in demand, and, bonus, it doesn't wear out like your favorite hoodie. Real estate, homes, shops, offices, is basically land with walls. And it's a great way to beat inflation. Even with the 2008 housing crash, prices have tripled since the 90s. That's like your grandma's house turning into a mini gold mine. Most folks wait until they're older to think about real estate, like it's some retirement side quest. But you can get in right now without buying a mansion. How? REITs, Real Estate Investment Trusts. These are companies that own properties, and you can buy shares, just like a stock. For example, Ventus Inc. owns hospitals and senior living spaces, which are always in demand. Or go big. Buy a rental property with a mortgage. Let your tenants pay your bills while you chill. Bottom line, land isn't going anywhere, literally. So, why not own a piece of earth and let it work for you? Collectibles, because sometimes toys are worth millions. Think rich people only invest in stocks and real estate? Nope. They're out here buying old cars, dusty books, and fancy handbags like they're building a billionaire's toy box. And guess what? These things can be worth a fortune. Regular cars lose value the second you drive them. But a 1955 Mercedes-Benz? One sold for 135 million euros. That's not a car. That's a retirement plan on wheels. The rich love limited edition anything, because rare equals valuable. But don't worry, you don't need a large amount of cash to get in. You can buy baseball cards, comic books, or action figures on sites like Whatnot, or go bougie with fractional ownership on platforms like Rally or Masterworks, where you can own a tiny piece of $1 million collectible